This live session from Banking Transformation Summit, the in-person AI and transformation event built for banks. If you work for a bank or credit union, you can join us there on November the 17th in Charlotte. I'm Mark Johnston. I'm your host for the next 30 minutes. In this session, we're discussing leading transformation, building a culture of innovation in banking. Now, in a moment, I'm going to introduce you to our expert speakers, but first, a word on your role as the audience. We want to hear your thoughts, and we want to hear your opinions, and we want to hear your questions. Please pop them in the Q&A chat, and I'll bring them into play throughout the discussion. Okay, right, on to our panelists. I'd like to extend a really warm Banking Transformation Summit welcome to Greg Bledsoe, VP Identity Management at Synchrony Financial. Greg, welcome.
Hi, Mark.
We've got Kristen Berman, CEO of Irrational Labs. Kristen, welcome.
Hello.
We've got Christine Whitman, Director for Compliance and BSA Officer, Trilliant Federal Credit Union. Hey, Christine.
Hi, Mark.
And we've got Kavita Karela, Senior Vice President, Director of Product Strategy and Merchant Services at Citizens Bank. Welcome, Kavita.
Hi, Mark. And I want to also share that all my views that are going to be shared are my personal views, not representing my employer.
Excellent. Thank you very much for that, Kavita. And for you, Greg, as well. Yeah, absolutely. Fantastic. Thank you so much. And to everyone joining us live or on demand, then welcome to the discussion. Okay, I'll just set the tone for the discussion with the results of a poll that we've just run, which many of you probably would have taken part in. So the poll question was, what do you see as the biggest barrier to successful digital transformation in banking today? Now, a massive 83% of you said resistance to cultural change, with 17% saying legacy systems and infrastructure. Right, to get started, we're going to have a couple of really quick, short, sharp questions for our panelists. So the first question, I'm going to start with you, Greg. What's one leadership trait that makes real transformation stick? Greg.
Optimism.
Fantastic. Thank you, Greg. Kristen, your thoughts on that one? What's one leadership trait that makes real transformation stick?
I'll go with focus, having a strong single focus.
Fantastic. Thank you. And Christine, let's come to you on that one. What's one leadership trait that makes real transformation stick in your thoughts?
I said confidence because I think it builds trust with other leadership and with peers, and also helps you make better decisions.
Fantastic. Thank you. And finally, Kavita, let's get to you. What's one leadership trait that makes real transformation stick?
Empowerment.
Excellent.
And cross-functional ownership.
Great. Fantastic. And let's go for another one then. This next question, let's go in reverse order. So Kavita, I'll come to you first. So what's the biggest barrier to leading transformation today?
I would go with resistance to change, like you mentioned earlier.
Okay, fantastic. Christine, what's the biggest barrier to leading transformation today in your thoughts?
That's what I said as well.
Yeah.
And specifically around employee resistance to change.
Fantastic. Biggest barrier to leading transformation today? Kristen, your thoughts?
I think time. I think people feel very busy in their current jobs, and change requires time.
Fantastic. And finally to you, Greg, what's the biggest barrier in your thoughts to leading transformation today?
Unlearning.
Fantastic. Okay, great. So the thoughts from our panelists there, if you've got a thought on that, if you've got a word for us, then pop it in the chat and we can have a look at those as well. And now let's go straight into the discussion. We've got a lot of ground to cover. So the first question I've got, I'm going to come to you, Greg, on, which is the first question is, what leadership behaviors drive successful digital and cultural transformation in banking? Greg.
So given that people have to have the confidence to try things that are not guaranteed to succeed, if you have a culture where anything you try that doesn't work is viewed as a failure, you are not going to get anywhere with modernizing. So the very first leadership behavior that you have to have is bravery. You have to have the bravery to shield your team, to encourage them to try things, and to absorb the heat when inevitably something doesn't go exactly the way you thought it was, and you have to answer questions about why. You've got to be willing to, take that for your team. And that when you model that bravery, it becomes contagious.
Fantastic. Thank you very much for that, Greg. And let's go to you as well on that, Kavita. Kavita, your thoughts. What leadership behaviors drive successful digital and cultural transformation in banking?
I will go with client obsession, actually, because I think, as Steve Jobs rightly put it, working from client expectation point of view, working backwards, really drives the success of any transformation program. And I think really addressing the client needs, client expectations would really drive, okay, whatever things that needs to be in place will really ties back to what the organization is for, to really serve the clients, serve the needs of the clients, being responsive, expertise, sharing the value creation, value generation. So for me, the client obsession being the center point to drive the transformation would really put everything in place, and everybody will drive to that common goal.
Excellent. Thank you very much, Kavita. And Kristen, your thoughts and add to what you've heard from your panelists so far. What leadership behaviors do you think drive successful digital and cultural transformation in banking?
Yeah, I'm going to do a little tangent and talk about a behavioral science story and anecdote we say is basically, we usually ask people if you like apples, and about 60% of people say yes, they like apples. And then you put apples out for people to take. And we've done this in cafeterias at large companies, and nobody takes the apples. And this is a conundrum. It says people say they like something and yet they don't do it. And you could look at this and say that people really hate apples. They must hate apples. But then when you put out cut up apples, like small apples, people take them. And so I think the same thing with transformation is that it may look like people don't like change. It may look like people don't want to do something new, but actually it's just hard. That they would do it if it was easy, and we do things very quickly and easily and have fun with it if we're able to do it and it's like built into our workflows. And so I think a leadership characteristic here is not assuming that people don't want to change, but trying to really figure out how to make it easy for people to change, whether that be making IT work better, making legal work better, and try to remove all the barriers to do the thing that they probably also want to do.
Excellent, fantastic, great answer. So fantastic. Thank you very much for that to our panelists. If you've got any thoughts on what you just heard, then just pop them in the chat and we'll bring that into the discussion as we go. We're going to move on to question 2 now. So I'm going to come to you, Christine, first on this one, right? So the next question is, how can banks foster a culture of continuous learning, agility, and accountability without losing regulatory rigor? Your thoughts?
Yeah, so as a compliance officer, I would say just involve compliance in the discussions. The compliance officer and team of compliance are there to provide guidance, provide support. So having that open dialogue with those who have a good understanding of regulatory impacts can really help make sure that culture is moving forward and you're successfully implementing change.
Okay, fantastic. That's great. Thank you. And Kristen, let's come to you on that one as well. How can banks foster a culture of continuous learning, agility, and accountability without losing regulatory rigor?
Yeah. So we worked with a large hospitality. So we're a behavioral science company. We worked with a large hospitality company on increasing uptake of their financial services products. And so this was a question of like, how do you get people to pick a credit card? And we really wanted folks to go through this flow and think deeply about their own preferences so that they would pick the card that was right for them. But obviously that's really difficult to do. And we wanted to basically test out a chatbot. And you can imagine it was very difficult in the organization. We'd have to get approval from Visa and MasterCard to do this. And we got a lot of no's. And then the team realized that actually JP Morgan had tested something like this. And all of a sudden the team said, we can figure it out. And so I think actually seeing that other people have done something can be a motivating factor to like decrease the barriers in front of you and not ask, we can't do this, but how can we do this? And I think when people start thinking, how can we do this? We can become very creative. And, creativity can involve doing it a different way to still ensure that the regulatory compliance exists, but involving kind of other folks in this conversation before saying no was kind of the key thing. People opened up their minds when they saw that it can be done. And by the way, the experiment was successful. So
fantastic. Thank you very much. And not an apple in sight?
No, not an apple in this one. Yeah.
Fantastic, great. And Greg, your thoughts on that one as well. Can you add to that anything you've heard from Christine and Kristen at all? How can banks foster a culture of continuous learning, agility, and accountability without losing regulatory rigor?
Well, I mean, people always accept the givens of the system. If you make sure people understand what is the set of controls that we're obligated to follow, why do we follow them this way, how do we interpret them, how can we reinterpret them? If people really understand the control set that you are implementing and the whys behind it, they just become background. They just become givens of the system that people are operating in. So I think the key is to keep that continual awareness that this is not just a set of rules that we follow for no reason. These are controls that are implemented in a particular way for a particular reason. And when people understand that, they tend to that's just a factor in how they make all their decisions. They're just guide rails that are just sort of keeping your decision making inside the boundaries, which I think the key to real agility in any regulated environment is making those guide rails explicit but also unconscious. People have to people just come to understand them as a part of the system, and then they operate inside that system. So the mindset that stops people from innovating and transforming really doesn't have anything to do with whether you're regulated or not, or the regulatory regime that you're in. It's how do you view it? What is the belief system that you have about how your organization operates? And that's the hardest part to attack. I mean, quite honestly, as your poll results showed, the technology is the easy part here. But there is no technical system. It's a social technical system. It's humans layering activity into the technology. And that is hard to change because people are hard to change. The technology does whatever you tell it, and it's the people that are telling it what to do. So you don't change the technology, you have to change the people. That starts people, process, tools. We've known that for quite a while, and it's still true here as well. So get people to feel comfortable with the regulation, get people to understand the whys behind it, and get them to operate creatively inside the boundaries.
Fantastic. Thank you very much for that, Greg. It's those pesky 83% of people that say they're resistant to change, right? So fantastic. Thank you so much for that. We're going to move on to the next question. Question 3, Kavita, I'm going to come to you first on this one, please. So the question is, what are the key traits of modern financial leadership in an era defined by uncertainty, disruption, and by innovation? Kavita, your thoughts on that one?
Yeah, I think given where we are in the world with all kinds of geopolitical, all issues and all the challenges everybody under the sun is facing right now, it is very important, I think, for leaders to really be purpose-driven on why organization exists and what is the purpose and how they are going to drive the organization and transformation, any initiative for that matter, even the business, towards keeping that purpose as an anchor and driving everything towards it. I think everything falls along the lines. I'm going to take an extra minute to share also, because there is other things as well, is along with the purpose driven is the strategic foresight. Accepting the fact that all these uncertainty and disruptions are here to stay. That's not something individuals like you and me can change. So it is going to be there. So what? So what is it we need to do differently? How can we have more strategic foresight so that we can come up with not a one-size-fits-all solution? It could be a multiple scenarios that perhaps the leaders needs to plan and create opportunities so that we can really, and so that the organization can look into, okay, if this situation A, this is a solution, and vice versa. So I think that is, the leaders needs to take things in a more strategic fashion into thinking futuristic, and also create a platform for new opportunities to arise, and being very intentional about it as well. I think that is the key for leaders to really address the uncertainty right now, because it's not going to change, and a lot of things that are happening in the world impact businesses, impact clients, and also keeping clients and all stakeholders that are involved in an organization in mind as well. So everybody is going through a lot, And I think leaders' vision and purpose-driven approach would take organization into the future.
Thank you very much for that, Kavita. Christine, I'm going to come to you on that one as well. So what are the key traits of modern financial leadership in an era defined by uncertainty, disruption, and innovation?
I said adaptability. I think when you're in a space of uncertainty, you know, having the ability to kind of adapt to changing environments is important. Not just, you know, at a leadership level, but, you know, your leadership kind of encouraging that at all levels of an organization. Along with that, having strong decision-making skills. I think that, you know, when you're in those situations where, you know, you're dealing with uncertainty or disruptions and, you know, how things are operating or technologies and that sort of thing, you have to feel confident in the decisions that you make that will impact the organization, and then feel confident in those decisions. So I would say strong decision-making skills and the ability to be adaptable.
Fantastic. Thank you very much, Christine. And Greg, let's come to you on that one as well. What are the key traits of modern financial leadership in an era defined by uncertainty, disruption, and innovation? Greg?
Well, I think one of the key differences between leadership and bossing is that a leader is the example of the behaviors that you need to emulate in order to move forward. And one of the key things that our organizations, that we as individuals have to have now, is comfort in uncomfortable situations, or comfort in uncertainty, and to find a way to be confident with a lot of unknowns sort of floating around. Not that you know all the answers, but you know that the answers are there to be found. Waiting around until you feel that you have 100% knowledge of every question that could possibly be asked is a recipe for doing nothing. So you have to find the bite-sized chunks that you can do now and do those things. And as you do that, then you find, and one of the benefits of doing it in small bite-sized chunks is you're delaying more and more of the decision-making to the future when you will have more and more information. You can wait and see, how does your organization uptake this change to decide how to proceed with the next change. So doing things in very small iterations of changes is extremely helpful. Goes back to what Kristen was saying earlier about slicing the apple for people. And people need time to digest the change. People change slowly, and they need time to really let that apple sit for a minute and digest it before they try to take another bite. So modeling forward motion towards results, and prioritizing that over answering questions that may end up mattering or not, is, I think, probably the key thing to keep in mind going forward.
Yeah, Kavita, come back in on that one then. Kavita, your thoughts?
I mean, adding to what Greg is saying, I think is the leadership quality also is doing the right thing. So is the key, because in these situations, like, I know we're talking specifically from a transformation and change point of view, but I'm thinking broader than that as well, because transformation change is part of what organization is going through, whether it is a bank or otherwise. But there are also other things happening in the organization as well, as it relates to serving the client, serving the other stakeholders within the organization. I think the leader's quality is the honesty to do the right thing, and also having that fortitude to stand behind it drives the whole culture aspect of how you approach things. What does that mean to the stakeholders? What does that mean to the organization, clients, employees, so on and so forth, so that it inculcates that behaviors from the top. That I just wanted to add that.
Fantastic. Thank you very much to our panelists. And I just wanted to bring some thoughts in from Connie, who's based in Chicago. Kristen has obviously got us all a bit hungry with her analogy on apples, and Connie's put in about the possibilities of transformation. When people can see the possibilities of transformation, it can bring people along. So she's put, as the saying goes, how to eat an elephant a bite at a time. Okay, so thank you very much for that, Connie, and keep your thoughts and comments coming in on the chat where we can. Okay, so let's move on to question number 4. And Kristen, I'm going to come to you first on this one, please. So question number 4 is, how can banks measure and reward innovation beyond traditional KPIs? Kristen.
Yeah. So I think even traditional KPIs in an organization that is hard to quote unquote innovate or whatever kind of people want to define that is not enough, because you're just telling people here's the goal, but actually it's really hard to get to the goal. What we've seen successful, so in our team we had some grant funding and we worked with a lot of credit unions to go do experiments. So we would try to increase or decrease defaults at Beneficial Bank for auto loans, and we did an experiment with self-help where we increased retirement adoption via training the tellers. These are very hard things to get through, and we ended up getting within a year experiment results. And I think the insight our team had in hindsight was that the structure of our engagement was very, very different. It was like there was a timeline, there was a very clear scope. They had an outcome at the end that the whole leadership team committed to. It didn't feel like normal work. It felt like this is a special thing with a deadline and the chance to get some thought leadership and PR. And so I think kind of rethinking the incentives as in like not just the number, but the structure of these teams. And it's not like an innovation team, right? It's just like, what is the structure of the team? I would say at a high level, this is kind of what Google has done right now, is they used to be kind of, like, oh, wow, ChatGPT is killing Google and Gemini, and now they've come back. And like, why is that? And if you talk to people internally at Google, they've restructured their teams and they're calling it wartime. They're like, this is wartime, and they have different roles within the group about what people actually do. And so I think having that mindset that it can't be normal work, that this has to be something different, will kind of bleed into process, and process is the thing that will kind of unlock those innovation barriers.
Fantastic, great. Thank you so much for that, Kristen. And Greg, your thoughts on that one as well, please. How can banks measure and reward innovation beyond traditional KPIs?
So I'm a bit of a contrarian on this topic. I have some pretty strong feelings about it. I think KPIs, key performance indicators, are a way to measure outputs, which I think is very counterproductive, because you're measuring outputs with a theory of how that output connects to outcomes, but that theory can be wrong. And you're actually incentivizing people to continue to produce the outputs, even if they're not connected to the outcome. So I'm much more of a fan of OKRs, objectives and key results, where people have objectives that they're supposed to hit that are not output oriented, they're outcome oriented. And this, I think, is how you determine, are people getting results? Not how many firewall rules did you configure, but is our access what we need it to be? How often do people find they can or cannot do access what they need? How, you're really looking for what's the cycle time when new access needs to be set up, things like that. Those are outcomes. So I think you have to stop with a focus on like a 1990s version of productivity, where it's about outputs, and start thinking about everything in terms of outcomes and results. One of the oldest and most venerable culture models out there, the Mueller model, where you have 3 levels of culture. You have pathological, bureaucratic, and generative. And in the generative culture, if you want to move towards that, everything is subverted to results and performance. And so the bureaucratic, the KPI, traditional KPIs lend themselves very much to a bureaucratic or pathological culture. And OKRs lend themselves very much to a culture where you are really incentivizing people to get the results the organization needs, not to produce that outputs that may or may not contribute to those results. So I think, again, it comes down to mindset. What is our belief system about how the organization operates? What are our explicit incentives and what are our implicit incentives? Because the implicit incentives, the rules that people already know we don't talk about how we do and do not get stuff done around here, are far more powerful than the explicit incentive models, like produce X number of widget tops. So I think it all comes down to mindset. It all comes down to changing the belief system behind what's the optimal way to get results. And that's the first thing that has to modernize, I think. And then modernizing the technology just naturally flows after that.
Fantastic. Great. Thank you very much for that, Greg. Perfect. So we're going to move on to question number 5 with this one now. So the final question of our discussion today. So Christine, I'm going to come to you first on this one. So the final question is, what role does cross-functional collaboration play in sustaining cultural change? Christine, your thoughts?
I would say the only way to sustain cultural change is to have that cross-functional collaboration. I think that you have to have an understanding of how everyone is impacted by cultural change, and not having everyone on the same page and kind of understanding how everybody works together, having that open communication between the different lines of business would hinder the success of any change that the organization tried to make.
Fantastic. Thank you very much for that, Christine. And Greg, let's come to you on that one as well, please. What role does cross-functional collaboration play in sustaining cultural change?
Well, I think it's everything. I think silos are essentially a manifestation of cultural misalignment of incentives. And if I say the word incentives a lot, it's only because I believe all human behavior is driven by incentives. And the incentives are often not what we think they are. They're not what we intended to set. We've accidentally incentivized things we didn't mean to. So when you have silos in your organization where I don't really care how what I'm doing in my job affects how everybody else is able to do their job, that means that you are misaligned. Your incentives are misaligned away from results and towards something else. And that could be meeting your KPIs. That could be protecting your own fiefdom inside the organization. It could be a lot of things. But the only way you're going to get people to align towards results, the results that are the reason the organization exists to achieve, is by cross-functional collaboration through incentivizing those results. The thing that people need to be trying to do is work with everyone else to get those results. And this also connects back to our conversation we were having about regulation, right? A lot of people inside banking IT view your second line, your internal audit as the enemy, as competitors. But if you bring them in and you collaborate with them in terms of what is the solution set that we need to present to the external regulators, what's the technology stack that we're trying to work with, what are the solutions that if you have a conversation with them, it can change everything. Now there's not even your auditors their purpose is to challenge you can become collaborators where you take that feedback and you have a conversation based on it. So to me, it's all about aligning towards results and away from all of the other sort of pathologies that infect our organizations.
Fantastic. Thank you very much for that, Greg. And Kavita, your thoughts on that one? What role does cross-functional collaboration play in sustaining cultural change?
I think I also go back to your first question. The response that I provided to your first question is, if driving towards results, as Greg said, but what are those results? Why does that organization even exist, for instance, to serve their clients or customers, depending on how they look at it? If everybody is not aligning together to serve their customers, even those results are not going to be met, because unless you are a non-for-profit, that is a different issue, different question. If you are in for-profit business, every business has a customer, client, depending on how you define. The whole organization is there to serve that client, because that's how you are going to get the results. And if everybody is not aligned to that common goal, to that common goal of serving that customer or client, then the things are not aligned in the organization, because everything that is done in a particular organization is to serve their stakeholders, primarily their clients. Obviously, employees and the other partners play a key role, but if we really keep that the common goal in mind, I think having that cross-functional partnership and collaboration is very much required to meet that ultimate objective of serving the clients and producing those results that organization is looking for.
Fantastic. Thank you very much for that, Kavita. Now we're running really close to time, so I'd just like to ask our panelists one real quick final sharp answer question, if I can. Kristen, I'm going to come to you first. The best leaders I've worked with always, your thoughts?
My general thing is I think bureaucracy can be the death of motivation, and so I think they take away the barriers for people to get their work done.
Fantastic, great answer. Thank you. And Christine, your thoughts? The best leaders I've worked with always?
I would say practice active listening and clearly communicate. I think you have to have that clear vision of the direction, and you can't get that without good communication with leadership.
Fantastic, thank you. Kavita, your thoughts? The best leaders I've always worked with always?
Empathetic and being inclusive.
Great, thank you. And Greg, finally, the best leaders I've worked with always?
Bring optimism. There's just a generalized confidence that there are no problems here we cannot solve, and we will solve them together. That energy is the glue that brings everybody towards results, in my opinion.
Fantastic. Okay, great. Well, thank you. Look, thanks so much to for your time. My thanks to our panelists, to Greg, to Kristen, to Christine, and to Gavita. Thank you so much for your time and for joining us. Thank you all for tuning in and joining this discussion. If you haven't already, then get your ticket to Banking Transformation Summit, where we'll be doing this in person on November 17th and 18th in Charlotte. Banks and credit unions, remember, all attend for free. And we'll be back on Zoom for another live session in a couple of weeks' time, and we hope to see you again there. Thanks very much, and have a safe stay. Thank you.